Good morning, good morning. Can you guys hear me? No, I need to change speakers. Alright, good morning, good morning. Can you hear me? Am I too loud or too quiet? Let me know in the chat room. Can you guys hear me? Well, can you guys hear me? Okay, thank you, Mikhail. Glad you guys can hear me, and we can get started. We're a little 1 minute late, but that's okay. Alrighty. If you can hear me and you can chat, I'd love for you to tell me how long you've been trading options. Wanted to do something a little bit different today. Instead of teaching you guys, let's get this out of the way. What was I doing there? Okay, yeah, there we go. Yeah, instead of teaching you guys the wheel from scratch, if we had enough people with experience, there we go, that's what I need to do. Need that one over there. Sorry about that. If you guys have enough experience, I wanted to jump straight to tips and tricks with doing the wheel. But if we've got a bunch of new people today, then I don't want to rob you guys of the opportunity to learn the wheel. So let me know how long you guys have been trading options for. While I figure out my screen setup here. Alright, let's jump into this. This is Fox with Stocks. Not much activity here this morning in the chat room. Make sure that we promote it more next time. I'm going to assume that you guys do not know how to trade the wheel, and I will be doing the full seminar then, and we'll try and dive into some tips and tricks for those of you who have already gone through this presentation. I do want to let you know that in our description we have some useful links for you, including the platform which we use is Tastyworks, and if you guys decide to donate, last time the PayPal button did not work, and we have that fixed now. So everything is inside of the description box below, and make sure to hit that like and subscribe if we do a good job. So, the wheel strategy, I'll get right to it. But first, let's talk about why. Why do we use the wheel? Boils down to 3 words: risk, reward, and convenience. I love using the wheel because I don't need to sit in front of my computer 8 hours a day getting ready to day trade, buy and sell individual stocks, okay? I can do my research in my own time on the weekend before the market opens or at night. I can put in my trades. I watch for an hour in the morning to see if the trades go through. This is why I can do a presentation to you guys and still trade live time, because it just is not a super time commitment type of strategy. This is good for somebody that has a full-time job, or if you just want to go out and enjoy your life. You know, to me, trading is investing, and if investing, you're trying to get more money for your money without spending all of your time. If I wanted to spend all my time making money, I'd get a job, and I'd go sell something, and then I wouldn't be risking my money. I'd be risking somebody else's time and money. So, to me, day trading just doesn't make sense if you can do a better job of making money someplace else. Okay, why else? Huge downside protection. We will talk about that multiple times during this presentation. Massive downside protection versus most of the other opportunities. Okay, now for those of you who've used options before, you know that they can all give you some downside protection. So why do we use the wheel? I haven't talked about that as much as in comparison. Why do we use the wheel in comparison to other options? Number one, in my opinion, is safety. When you mess up, in other words, if you choose the wrong direction, the wrong strikes, when you mess up on a different option strategy, 90% of the time you're going to settle to cash, which means you put cash in, you're right, you make cash, you lose cash. Okay? If you're wrong, you lose cash. When we use the wheel, I'm going to show you, that when you're wrong, okay, you end up owning the shares. And as long as you do your fundamental research of that company, that's going to be a good thing. You want to own the shares. So in my opinion, it's safer than many of the other option trading strategies. You can debate me on that, but the reason I'm saying that is because you settle for shares. You don't settle for cash. Okay. Why else do we use it? Because it's repeatable. You can use this strategy every single month and generate income or generate growth, okay? You don't have to go out and find 20 new stocks. You find the stocks that you like, you can continue to make profit off of it. Okay, what are options in case you guys are new? By the way, if you guys want to let me know in the chat room how new are you guys to trading options, how many months have you been trading options, that would be great. I'm going to assume that you're new if you don't say anything, okay? An option is a two-sided contract between buyers and sellers, longs and shorts. Allows the buyer the opportunity in the option to trade 100 units of a stock at an agreed-upon price by a certain date. We call that agreed-upon price the strike price. For this contract, the buyer must pay a premium which the seller receives. So it's not the broker getting the money from the buyer, it's the seller. It's a two-sided marketplace, buyers and sellers. The broker is just the go-between. Today we're going to use the example of space. Virgin Galactic, ticker symbol SPCE, stock price $30. We could go out and sell the May 7th $30 call. That was 30 days. That was a 30-day option when I made this slide, okay? It cost you, the call would cost the buyer $3.50. Now that means that the buyer would pay $350 to get that call option. The seller would receive that $350. Difference between buying options versus writing options. If you're buying an option, you're going to create leverage or you're going to create insurance. This is a high risk, high return, or capped and uncapped return, depending if you're doing calls and puts. But most importantly, time is against you. Time is against you. You must get the direction right, and you must get the timing right. When you are writing options, it is the inverse. We are getting a medium return, and we can set it up so that we get very low risk. We're going to get monthly premium. We're going to be safe by lowering our cost basis versus shares. And very, very importantly, it is tri-directional, meaning three directions. It can go up, and go sideways, and go down. We still make our profit. And very, very importantly, time is now on our side. When you're buying options, time is against you. You must time it correctly. When you're selling options, you want time to run out. Time is being put onto your side. The wheel strategy is not a spread. It is a simple two-step strategy. We find a stock that we like. We sell cash-covered puts against the stock that we like. And if assigned, we now own those shares, and we use those shares to sell stock-covered calls. Both of these strategies generate premium and lower your cost basis every single month that you do it. This is what it looks like in a flow chart. We start by writing the cash-covered put. We wait towards expiration. Does it get assigned to us? If yes, then we write the stock-covered call. Okay? Then we wait towards expiration. Does it get exercised? Do the shares get taken away from us? Yes. Then we go right back to selling cash-covered puts. But every time it's not assigned or not exercised, the option will expire worthless for the buyer. Remember, we're the seller, which means that we just collect the premium. We keep all that premium and all that profit goes right into our pockets, and then we go back to the previous step. If we were selling covered calls, then we'd sell covered calls. If we were writing cash-covered puts, we'd write the cash-covered put all over again. Let me know in the chat room if I'm going too fast. Does this make sense? Okay? Let me know how we're doing and if I need to repeat anything or go into more detail. Otherwise, I'm going to continue moving forward, but let me know in the chat room. Let's light it up. Let's do an example together. We're going to use Virgin Galactic, okay? And I want to compare it to a normal buy and hold strategy. So let's say you wanted to own or have 100 shares of space. You're thinking about space. It's a great company. You want to invest in it. You go out and you buy 100 shares. Here's some scenarios. It goes up, you're going to make money. It goes sideways, you're not going to make anything. You're going to waste your time. And if it goes down, you're actually going to lose money. Let's compare it to selling the $26 put for $1.30. That's $130 in premium. And this is going to give us two new terms here that's very important. Break even and break even percentage. Our break even, because it's a $26 put, we subtract our premium to create our break even of $24.70. So we do not lose value We do not run any real risk until it goes below 24.70. So let's talk about this. It goes up in scenario A, goes up 10%. Mr. Buy and Hold is going to make $300. The guy selling the cash-covered put is still going to make money. It's above the break-even. The option is going to expire in his favor. He's going to collect $130. So you make less than the Buy and Hold guy, but you have less risk. Scenario B goes sideways. Our Buy and Hold guy just wasted and risked his money for 30 days and made $0. We, selling the cash-covered put, are well above our break-even. We can close and get $130, keep all of our premium. Let's say it goes down. Mr. Buy and Hold loses 10%. He's going to lose $300. We're still above our strike. The strike is $26 for the $26 put. We're completely above our strike at $27. We still get to keep the $130. That's what I mean by tri-directional. If it goes up 10%, we make money. If it goes sideways, we make money. If it goes down 10%, we make money. It is a tri-directional strategy. You do not have to get the direction perfect. And I want to be clear, it's great when it goes up because you can close early, you can get your premium back much, much faster. So it's still a bullish strategy, but it's also tri-directional. Now let's get to the negatives. Scenario D, it goes down to 25.50. Mr. Buy and Hold just lost $450 by putting his capital at risk. What happens to us? Yes, it's below our strike. You can see that. The strike is $26 when we sold that $26 put. But it's $25.50. We collected $1.30. So we're only going to lose $50 of our premium. 130 minus 50. 50 cents times 100, $50. That's why we still make $80 at the end of this. Are you starting to see how powerful this is? When you can collect $80 even when the stock goes down 15%. Is this making sense? Let me know in the chat room, guys. Scenario E goes down 20%. It's now $24. Mr. Buy and Hold lost $600. Guess what? We're going to lose a little bit of money, but we're going to lose like 1/10 of what Mr. Buy and Hold did. He lost $600. We're going to lose $70. Now we own the shares. This is important for you to understand. We own the shares at $24.70 because that's what our break-even is. Guess what? If this goes back up $1, we're right back to being profitable. We're going right back to being profitable. What happens if you're Mr. Buy and Hold? You bought at 30, it goes to 24, then it goes back to 25. Guess what? You're still losing $500. This is crazy. And then option scenario F, okay? Goes from $30 down to $22.50. Excuse me, I got a text message. I don't know that. Anyway, goes down to $22.50. Mr. Buy and Hold is going to lose $750. We're well below our break-even at $24.70, but instead of losing $750, we're only going to go down $220. And like I pointed out before, what if this goes back to $25? Okay, Mr. Buy and Hold is still going to be down $500, and we're going to be right back to being positive again. That's how great this strategy is. This is why I use it every single month. Calculations. Okay, let's actually just go ahead and do some right here in Tastyworks. I was looking at Hillian today. Let's look at if we did it right at the money. Clear all those out. You can click on the bid. Excuse me. Okay, you can click on the bid, 83 cents to $9.50. If you want to know how much premium that is, it's really easy. Type in 0.83, divide by 950. Gives you a long number. Okay, this is 8.7%. That's an 8.7% if you sold at the money. That's how you do the calculations. That's how you calculate your ROI. Notice this is a $44 strike. So, 44 days, 8.7%. You want to compare apples to apples. Hey, hello from Singapore, Mr. Naresh. Oh, I don't know if that's male or female name. I'm sorry, Naresh. Okay, let's keep moving. What if you wanted to compare apples to apples? You want to compare the 37-day strike versus the 44-day strike. Which one's going to give you the better APR, annual percentage rate? We're going to take our 8.7, remember that number, okay? We're going to take 365 divided by 44. and then we're going to multiply it by our 8.7% return, and this is going to give us a 72% APR. So if you were to compare that to another stock or another strike at a different date, you would know which of the two is giving you a better return if all other things were equal. Excuse me. All right, let me know, guys, if I'm going too fast, if this is making sense. Type something in the chat room. Don't be shy, okay? And I want to point out, and be careful out there when you guys are watching the 19-year-olds on TikTok. They'll use compounding growth charts against you, try and trick you into thinking you can turn $100 into $1.1 trillion in 52 months with 20% compound interest. It's not feasible. But guess what? For me, this is feasible. Last year, I did make a 5% return, 5 to 7% actually, every single month using the wheel on a $25,000 account, which is how I grew it to $43,000 in less than a year. And I want to point something out, very important here. Let's go for a medium return. Excuse me, 3%. You're going to make $300 the first month. You're going to make $303, et cetera, et cetera. You see how it's going to go up more than just $300 a month, compounding your growth. This is why it's so important when you guys are trading that you don't take money out of your trading account, okay? Try to make it ride for at least 5, 10, 15, 20 years. 5 years of compound growth using this strategy is going to be absolutely amazing for you. But if you make this $300 the first month, then you take out $300 and go buy a new pair of sneakers, you're going to lose all of this compound growth. Instead of making, $4,258 by the end of the year, you're only going to make like $3,000 at the end of the year. Okay? That's an extra $1,000 that you just paid for your sneakers because you took the money out. Don't do that. This is a compound growth strategy that works. It's reliable. Okay? But you have to not take the money out. You just can't. That's the way it goes. All right. We already pretty much did one together inside of Tastyworks. I want to get moving. I think you guys, let me know. Did I go through this too fast for the 6 of you that were here from the beginning? Did we go through this too fast? Do you understand most of this? Let me hear some questions. Okay? Because I want to start going and looking for some trades. I'm excited this morning. I've got a few to go look at. If you like what I'm doing, consider using my referral link. Consider using the tip jars below. We've got a new PayPal link that should work. Okay? And ask me questions. I'm here for you guys. If I went too fast, this is like the constrained version of it, the faster, leaner version of teaching you guys the wheel strategy. So let's do this one more thing, because the wheel strategy is 2 parts. It's not just selling the put, it's turning around and selling the call. So let's assume that you've already taken possession of some shares that you previously sold a put on. And maybe when you're doing this, you went 5 steps out of the money. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So you sold the $7 put. You collected 10 to 20 cents in premium. Those got stuck to you. Now what do? You got to turn around and sell the call. How are we going to simulate that? See, the price is going to be completely different in a month. The IV could be different. How do we simulate this? Well, let's go the other way. Okay, let's pretend we're selling a call 5 steps. 1, 2, 3, 4, 5 steps out of the money. Okay, it's not going to be the same. You can't predict what you're going to get, but maybe you'll get 30 to 40 cents selling the premium when you turn around and sell the covered call. Okay, so what are you doing? Well, over here you're making $10 every month that you do this. You have a cost basis of $6.90, and then you turn around and maybe you'll get 30, 40 cents selling the call. That's another $30, $40 as you're waiting for the price to go up. Notice that we went 5 steps out of the money. You don't have to do that. Depends where the price goes. If the price is $6, you could, if you want to, right? If the price is $6, you go 2 steps out of the money. Go back up to the 7 where your break even is. Ignore this because it's in the money. Well, let's pretend that you did that down here. You could generate more profit. Instead of getting 30 cents, maybe you get 70 cents. Okay? The trick is when you're selling the covered calls, you want to be equal or greater than your break even. So if you turned around and sold the $7 put or the $8 put, you subtract the premium that you've already collected. You want to make sure that when you turn around and sell the covered calls, that it's at or above that break even. So if you had a cost basis of $7, then you want to sell the $7 call. It's literally that simple. Okay? Now, really important question. Okay? What if we sold the $11 put? Okay, we collected $1.74, and it went all the way down to $8. That's a big jump. Our cost basis is actually 11 minus $1.74. You're at about $9.25. So your cost basis is $9.25. Today it's trading at $8. Maybe that's too far away to get any good premium. What do? You make a decision. Do you still like the company? If you still like the company, go between the two. Okay, go between the two. You can't sell the $10 or the $9.25. Try to get to the $8.50, the $8.75, the $9. Sell that. If it's going to get taken away, you can roll it forward. If you don't like the company, again, let's pretend we sold the $11 put. It got put to us. Now it's trading at $8, $7, whatever. You somehow change your mind. You go read the news. You don't like the company anymore. Dump the shares. Go sell something else. Go start the wheel over again with a different stock. Okay? That's what I've learned on some of these shares that I've taken possession of and don't want anymore. I should have dumped them a long time ago. All right. It is 8:50. We're going to finish up the educational training part early. And let's go look for some stocks. Unless you guys have any questions at all, hit me up in the chat room. Happy to talk to you guys. It's more fun when I don't feel like a guy just talking to himself in a room by himself. A lot more fun when I'm talking to you guys. Alrighty then. So, I want to talk to you guys today. I went ahead and I picked out 4 stocks that I'm interested in doing. AFA, which is a cannabis stock. Hey, Marilyn. By the way, Marilyn, the PayPal button is working now. I think you wanted to donate yesterday and couldn't. We got that working. We're looking at AI. We're looking at doing the May 21st, 37 days out. I'll show you what that looks like. So I also don't remember. See, AI, we don't know if they have any earnings coming out. Naresh asked a great question. Thank you. I'm glad we finally got a question. Was the cash secured put fully utilized, or you allocated 20% of the US 25K for the wheel strategy? So I'll tell you what I did. Is I actually had a main account that was larger, and I tried a bunch of different strategies in there, and I liked the wheel so much that I took $25,000 out of that main account, or my checking account, and I set up the wheel account. And that wheel account only does the wheel. All it does is the wheel. So did I allocate 20% of the 25K for the wheel strategy? No. That was a completely different allocation. That 25K only uses the wheel strategy. And I don't always use all 25K or the full account every single month, but I'm pretty close to full allocation on that account. Does that make sense? Did I answer your question the way that informs you, Naresh? I want to make sure I answered it correctly for you. Anyway, moving forward with AI, there's a bit of a chat delay, so if I just wait for you to answer, I'll wait forever. Let's go look at AI, currently trading at 64.50. You can see that I had set up a put option at the $55 mark. We're going to collect $2.30. Is that what I did? Yep, $2.30. And I want to show you the numbers on that. So let's take 230, boop, divided by 55, boop. That's a 4.1, almost 4.2% return inside of 37 days. So this is not a super aggressive strategy for me. This is not like a super high return for me. I like to get between 4 and 5% every 30 days. Excuse me. So this is a lower one, but I saw the company has a ton of cash on hand, and I haven't been super aggressive this month, so I want to open up more positions, so I went ahead and put that on. And this month, I'll tell you, it's been a little hard this month to make trades because earnings week is like everyone is doing earnings in the first 2 weeks of May. And so that's exactly 30 days from when I started this podcast or this YouTube cast. YouTube stream. And so it's actually been hard to open positions with you guys watching just because so many earnings dates are coming up in early May. So if you're feeling that, I feel you. I'm right there with you. Now, we could do the math for calculating the break even, but I'll tell you what, in Tastyworks, it's pretty easy. You come down here, you look at the max loss. You imagine there's a decimal point 2 steps to the right. You know that your break even is $52.70 a share, $52.70. Obviously, that's 55 minus 230. Some of you are quick at math. Some of you need the calculator. You don't even need the calculator. You just look at the max loss. So now what I want to do, 52.70 divided by today's trading cost. 64.50. So we're taking 52.70. We're dividing it by today's trading cost of 64.50. We're going to get 81.7%. What is that? That means that our cost basis is 81.7% of today's trading price. If you invert it, you know that you're getting an 18.2% discount if the shares get put to you. Does this make sense? Please let me know in the chat room. If the shares get put to me based on today's trading price, I will be getting them at an 18.2% discount, or in 37 days, I'm going to have $230 into my account. So one of those two things. I'm either going to have 100 shares, 18% cheaper than if I were to buy them today, or I'm going to have $230 or some number between $0 and $230, depending upon where it settles. If this goes up, then I can close it early. I can close, and maybe I take $200 instead of $230, but I close it early, I get rid of the risk, and I actually increase my APR. Very important strategy when you're doing the wheel is knowing when to close early and just take the profits, okay? Now, if you look here, and I don't like, Tastyworks doesn't seem to be giving me the best yearly chart of all time. I don't know how to fix it or make it any better. Yep. But you can see that AI has been doing a long-term trend down since 2021, early. Okay? We're not buying anywhere near the top. Let's go look at this on Walmart. Boop, 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 boop. AI. And AI is sort of like the enterprise solution for large-scale AI solutions. That sounded very roundabout. But they're kind of like Google and Amazon, other companies. They're kind of like Palantir, basically. They're really like a comparison to Palantir, but Palantir is very hot, very exciting. People love it. Palantir has a lot of sachet and sway because of the FBI, CIA, and Defense Department using them. AI doesn't have that much sway, but you're going to get, if we're right long term on AI, you're going to get a much nicer entry point here, right, versus Palantir. Let's take a look at Palantir and do a side-by-side comparison. ELTR, Palantir. Yeah, Palantir had a spike up to 39. Now they're down to 25. They've had some very low cheap prices for a long time, so there's a lot of people that can sell out, take profit. Okay, institutional ownership is only 12 and 13% versus 35 and 34%. So 70% of the company and the investors want to see the stock succeed and go up. Okay, we're looking at a $6 billion market cap versus a $46 billion market cap. Take with that what you will. Revenue quarter over quarter up 40% on AI. Not reported yet or not calculated yet on Palantir. If we come down and look at the quarterly income statements, Palantir is losing 148. Cash on hand is 2,000. These are obviously times a million. Excuse me as I scroll down. They're burning through 16 million a quarter. They have 960. So, how many quarters can they survive? 960 divided by 16.8. They can survive 57 quarters. They have tons of cash on hand. They're doing just fine. Palantir, 248 divided by 148, can only survive 13 quarters. So, if you look at the run rates between these two companies versus their cash on hand, AI is better between the two. Now, I'm not saying they're better companies. It's up to you to decide, but here's the other thing about Palantir. We take 1167 divided by 2690. We're taking the total liabilities, dividing it by the total assets. They are leveraged up 43%. That's not bad, okay? Bad is 70%. 70% is a complete no-go zone for me. But here you can see that AI has only 9% leverage. So AI can continue to borrow money much longer than Palantir if necessary, okay? Which gets rid of our dilution worries. We don't have to worry about being diluted as much as long as they choose to do that. Anyway, you guys tell me if you guys like Palantir, if you guys have looked at AI. I'd love to get your feedback on this. I haven't done a super deep dive on AI or Palantir. I've done basically what you've looked at here. I've checked out some other videos. I've checked out the news. Obviously, we're not trading around earnings for them. But if you guys have any deep dive, fundamental analysis and opinions on AI versus Palantir, I would love to hear that, especially before my trade goes through. All right, what else we got working? That was AI. We got AFA and Tilray going to merge and become the same company pretty soon. TLRY, APHA. All right, but Tilray earnings are coming out 10th of May, whereas AFA's earnings are not coming out the 12th of April. Not sure how that's going to play out, having earnings at different dates when they're about to merge. Okay, they're both in Canada. AFA's only been doing an IPO since 2020. Tilray has been public since 2018. Tilray's revenue is 20% quarter over quarter. AFA is 33% quarter over quarter. Okay, institutional ownership is pretty much on par, 16 versus 13. Curious that insider ownership for AFA shows 0% basically. I wonder if that's because of the merger or something else. And what I notice on Wallmine is a lot of the insider trading does not show up on foreign companies, so it shows up only on the U.S. companies. Doing the same thing, if we take the debt to asset ratio, blah, 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 liabilities divided by total assets, 863. Notice you don't even have to do Canadian to USD conversion. You're just finding out the percentage. Afria has 30% leverage. And then Tilray is massively 572 divided by 945, 60% levered. So that's why I'm more interested in opening up a position on AFRA. In case the merger doesn't happen, or even if it does happen, the company that I'm trading in has lower leverage, and they're going to become the same company anyway. But if they don't, then I have Afria, which has less levered up on their capital. So that's what we're doing. We're doing Afria at 62 cents. Okay, let's come in here. I'll show it to you what it looks like. 62 cents on the $13 strike, 0.62 divided by 13. We're getting 4.7% in 30 days, so a better return than what we're getting on AI. You guys let me know if there's any stocks you guys want me to look at. Okay. And if there's anything you want me to review, this is the time to do it. We got 27 minutes before the bell opens. And I like to interact with you guys. I like this to be a fun live chat experience. Now, I've already done most of my research today. I went out and I found 4 companies I want to open positions on. I would love to hear if you guys have any thoughts on New Beverage, Hillian, AI, or Afria. Hillian is sort of the lost child of the EV semi-truck space. They took a dive when Nikola turned out to be a fake, a fraud, a phony. What are we doing here? It took too long to load. There we go. So I just want to compare the two, Nikola and Helion. Now Helion is trying to do, I think long term they're trying to do hydrogen, but in the meantime they're trying to do natural gas, and they're doing batteries and natural gas. So the semi-trucks will have some battery range, and as that gets low, then the natural gas. When the natural gas basically starts making electricity, then they can charge up while they're driving, or they can be using the natural gas while they're driving and charge, giving them a much longer range. They don't need to stop and... Marilyn, I'm still at PTR and AI. What do you mean you're still at it? You mean you're doing them, or you're researching them? Okay. Anyway, Nikola and Helion. Helion has... I'm really big on the electrification of the semi-truck space. I do own a lot of Tesla shares. That's my big concern and why I haven't been trading Helion or Workhorse, because they're competing against my Tesla shares. But I need to open up some more wheel options, so I'm willing to come take a look at these. If we look at Helion, they had a massive run up to $52, $54. And then October, November, they had a big decline. December, January, a big decline. And they had a pop in March and they're coming down. This is worrisome. Could be a fake company. Could be the next Nikola. I watched an interview. Don't really like what the CEO says. It's kind of wishy-washy. They're trying to pivot themselves as being an electric truck, trying to say that they're electric when really they're natural gas hybrid. But they actually have working trucks out there, so they're not like Nikola. They're not just pushing them down hills and all the other fake crap that Nikola did. Now, if we come and look at this, institutional ownership is 16%, insider ownership is 39%. We don't know revenue quarter over quarter. We are seeing that they are negative geared, meaning they're spending more than they're making every month while they grow. They're losing $19 million a quarter. If we take 389 divided by 19, we know they have 20 quarters of cash on hand. That's the way you can think about that. And if you look at the liabilities, it's super low. They only have 10 out of 650. They are 1.2% levered up on their. What's the word I'm looking for? Anyway, they have about less than 2%. Anyway, in their borrow. So they can go up to 70%, they can borrow till the cows come home. We look at Nikola, institutional ownership is less by 3%, but insider ownership is up by another 30%. That's after the CEO got to sell his shares and leave. He should be in prison, but it doesn't look like the SEC is going to do anything to him. So, congrats to him, I guess. Anyway, if we look at their liabilities, 66 divided by 1053, they have 6%. The liabilities are still super low. We don't care about that. But look at their cash on hand. Take 849 divided by 147. You see Nikola only has 5.5 quarters before they're going to start to run out of cash, which means they're going to have to borrow, they're going to have to print, or they're going to have to sell out. Because I don't think they're a real company. I'm surprised they're still in business. Anyway, people should have gone to jail for that. So I'm making a bet that Helion's a real company. They've got trucks on the market right now. They did, this is kind of cool. They're making a big habloo about this. They did the Hypertruck Innovation Council, and what matters is all these people that came onto the council with them. So these are people that they're going to be showing and demoing their trucks to. This is people that they're going to be giving their feedback on what they want to see in these trucks. Okay. Agility Logistics, American Natural Gas, Anheuser-Busch, GreenPath Logistics, NFI, Penske Truck Leasing. I don't know what Ron is. Ryder System. Everyone knows Ryder. Okay. It's a lot of big companies. Anheuser, Penske, and Ryder, all very, very big companies that are going to join this council. They're going to have basically giving feedback to Helion. Helion. I always say it wrong because it seems to me it should be Helion. All right. Marilyn says, I'm slow. Still researching Palantir and AI is a strong buy according to Investors Observer with a beta of 0.821. AI is rated buy with a beta of 2.395. Palantir, we're saying PTR, but it should be PLTR. Make sure you're looking up the right stock. PLTR. Average forecast is plus 27% versus AI plus 122%. So it seems like AI is the better buy between the two, unless you were looking up PTR, which could be a completely different company. Because we're not looking at PetroChina Limited Company. Just make sure that we're looking at Palantir, which should be PLTR, or Palantir Technologies. Thank you, Marilyn. Just a typo. I'm glad. Otherwise, it'd be funny. All right. So that's why I've done the trade between Hillian. We've compared it to Nikola. I think Hillian is just getting beaten up, maybe unfairly. They had a decent return, 31 cents. I'm putting it at 39. I'm trying to squeeze a little bit extra. We're getting 39 cents, 0.39, divided by 8.5. We're getting 4.5% in 30 days. Okay, so we're going to get 4.5% as long as that goes through. But remember, we are tri-directional on this. We are tri-directional. So it doesn't have to go up. We are not betting that it goes up. We are bullish betting. We want it to go up, okay? But we're not betting that it has to go up. And look at it. It's trading at about $9.90. Our break even is going to be $8.11. Okay? That's a big difference. Let's give you the exact number here. Just a second. 8.11 divided by 9.9. Invert it. We are again getting an 18% discount if we end up owning the shares. The company has to drop 18% in 30 days for us to lose money on this trade. We have a 72% probability of profit based on the trading history. Okay? So even if this company is going to turn into a nothing burger and their technology sucks, it would have to go down 18% in the next 30 days. And I think people are going to look at this stock and what it's being priced at now, and the CEO starting to go on doing more PR, and I think we're going to get a recovery for this stock. I think the stock's going to make a comeback, right? I mean, by all accounts, they should be beating the crap out of Nikola. Nikola's a fake nothing burger. Anyway, that's my thesis on this. We'll see what happens in 30 days. The other company I'm looking at is NBEV, New Age. And I did some research on this a few weeks ago. I kind of forgot. Excuse me. Good night. I did some research on this company. I sort of liked it. I didn't like the ROI I was getting at the time. That's why I didn't do it. Let's see. Earnings call, merger. Got a big bump there. And this is, like I said, or I hadn't said yet, this is a pot company that is making edibles. They want to go into the soda industry, cannabis and soda, cannabis and drinks. Okay? I want to be long on cannabis. The cannabis sector is going to be legalized eventually. It's already starting to be legalized. You already have big business in Canada. The U.S. is not going to want to miss out on that. Okay? So I want some cannabis stocks because from 2019 to 2025, they're estimating that it's going to go from $19 billion market cap to $65 billion market cap. So I want cannabis stocks because I'm here to make money. If you guys don't like it because it's cannabis, it's okay. I understand. You don't have to make these types of trades. But if we can get some good premium out of this, I'm going to show you what we're doing. This is the only thing that's scary. Let's go look at the open interest on these. Open interest. Super low volatility on this. Super low volume on this stock. So we may not get any fill. Prices may not be right at all. But if this goes through, we will have massive downside protection. Right? Currently trading at $2.50. We'll be getting 50 cents at the $2 strike. we'll have a break even of $1.50 on a stock that's only $2.50. It potentially has huge upside potential. Alrighty. I need some more stocks to look at. You guys come up with some suggestions, some ideas today. What are some stocks that we should go look at? Check out my portfolio while we think of some stocks. Riot and Mara, I looked at those. They have earnings coming up. That's been the big setback this month, this week, this last 2 weeks. There's just so many earnings coming in the next 30 days. My Tesla shares are up pre-market 2%. That's beautiful. Makes me very happy. Riot is going up again. That's good. I own a little bit of Riot. Space not doing as hot. I'm waiting for them to put Richard Branson in orbit at least once and start doing their live revenue stream, basically. And I think this stock is going to blow up afterwards. I'm going to probably sell, well, we'll see where it goes. Don't quote me on anything, but I'll probably sell a quarter to half of what I own and probably hold the rest and free ride the rest. Free riding is when you get a stock that goes up significantly, goes up 50%, 100%, 300%. You sell off a portion, you keep the other shares because the movement just paid for them. Lumina's up. I should have bought way more of this back when it was down here. I got this super cheap. I think I got it cheaper than that. No, it must have been in here. Alright. Genomics have been really good for me. The problem with the genomic companies is they're so high. If I go through ARCG, let's go through ARCG again though. We'll find out ARCG's holdings. ETF database. Love that site. And Warrior Holdings. Well, there you go. So, if you're ever looking for stocks, one of the great things you can do is find an ETF that you like, especially if you're doing it in a sector. Say you want to do cannabis stocks. Go bring up a cannabis ETF using this website, etfdatabase.com, etfdb.com. And then you can just sit there and you can go through them one by one. See what they're trading at, see what the options are doing, and see what the price is. Only problem with this one is it's $191. If I were to run the wheel on this, it would use up most of my bank account, most of my account size, if that. And we have earnings coming out May 5th. So unfortunately, we're going to skip Teladoc, even though I would like to do it. Exodus, similar problem. High price, May 4th. Doesn't fit our account size. We do ARCG itself, which is nice because that's a whole ETF. You're getting access to a whole bunch of shares, and they don't have any earnings catalyst to worry about. But unfortunately, if I did the math right before, take 89, we take 460 divided by 89, we're getting 5% at the money, so we're not going to get 5% out of the money. We're not going to get any downside protection and still get 5%. Let's come down to 310 and see what that comes out to. If we do the 310 divided by 85, we'll get a 3.5% return. We'll have a break even of 81.90. So we take 81.90 divided by 89.76. Invert it. We have a downside protection of only 8.7%. I've been debating whether or not to do this one because you're not getting as much downside protection as you do with an individual share. We're going to tie up $8,000 worth of cash. Actually, it's going to be a lot less because, look at this, I have a margin account. When you're selling the wheel, they will apply the margin to the shares if you have to buy the shares. If you have to buy the shares, they will apply margin to those shares because then you just own shares. You're not actually getting margin on the options trade. It's important to understand that. So I could do this trade. Actually, this is becoming very interesting. I can get $310, and my buying power is only going to go down $1,364 because it's going to be tied up in margin, not in cash. So they won't be setting aside my $8,000. That's actually pretty sexy because you're getting such a high multiple on the margin for this because it's an ETF. 1364 divided by 8190. Whoops, 8190. Yeah. Can't do the math right now. 166. I did that wrong. 100 divided by 16.6. You're getting a 6x multiple on the margin. You're getting a 6x multiple on the margin if we do this trade. So we'll be tying up, we're making $310 on $1,300. You know what? I'm going to do it because I want genomics, and this is becoming more interesting to me now because we can do it with margin. Yeah. I'm liking this. You guys liking this idea? I like ARC. I like genomics. Genomics are going to be huge over the next 10 years. I wouldn't mind owning some shares of this. Why not wheel it? Especially because you're not tying up much buying power. What do you guys think about this? Trying to decide what number I want to go in at. This is becoming more interesting to me. We might have stumbled on a real idea here, guys. Because if I go down to the $75 strike, I still make $100, and my buying power effect is only going to go down by $755. So I'm going to make $100 on $755. That sounds good, right? That's a 13% return when you calculate it as margin. That's a 37-day. There is no 30-day option. Okay, so if I get 13% in 37 days, what is that? 365 divided by 37 times 0.13. I forget what it was, 0.13 something. Let's just say 0.13. That's 128% APR. And it's in a sector that I want to be in. And I'd be having a break even of 74 off of 89. And that gives me my 17% break-even discount. Guys, I think we stumbled on a really good idea here. Something I wouldn't have looked at before or really considered because I'm not used to seeing such high margin on most of my trades. Because I'm doing crazy shares and crazy companies. I really like this idea now. We might have stumbled on something good. It's only good in a margin account, though. I wouldn't want to do this in a cash account. Interestingly enough. I think I'm doing that wrong. I'll do it that way. Because basically you're getting $2.15 off of the 1064 instead of the 82, which is going to basically work out to a 20% return. Break even is 79.85 divided by 89.86. Gives us a 12%, gives us an 11, not 12, gives us an 11% break even, but then we make $215 in a month. I'm going to do both of them. Obviously, this is the better one out of those two. We do the 75. So there's a lot higher open interest at the 83 than the 82. I might move this one up or down one. Get it to 81 or something. Let's figure this out. Only 8 viewers today, but you guys, I think, have watched me stumble upon something very powerful today. And let's go ahead and give out some Discord invites. We have a live Discord chat room. You can talk to other members who have watched these videos. We've only been giving these out to people who watch live, and so you'll know that they've gone through the wheel explanation videos. You'll know that they've seen me trade. They understand some of my concepts. You'll be in a group of like-minded peers, if you will, who understand similar terms as you guys. If you guys want an invite to our Discord group, though, I need to hear you say it in the chat room. Let me know, and I will make this invite for you guys and hand it out. Okay, so I'm thinking about doing the $82 put. I'm going to collect $215 in premium, and then I'm thinking about doing the $75 put, getting $100 premium. But we're not calculating it at the $75 and $82 put. We're calculating it versus our buying power, which gives us a very, very nice return. Unless the thing goes really south, and then we're on the hook for the max loss, and then things go really, really bad for us. So I couldn't do this in a cash account. It would tie up too much capital, wouldn't generate enough return. There's an ETF across many, many share types. This is probably very, very healthy to do. The only problem is genomics has had a big run-up over the last year. I don't have any reason to think that would slow down or backpedal in any way. But let's just think about this. We got 5 minutes till the bell opens. We got 5 minutes to do some research on this trade. Let me know in the chat room if you guys want a Discord invite. Maybe you guys are already in there. Maybe the only people listening to me are the people that are already in my Discord Discord group. Is that right? I'm looking at my Discord channel. Debbie has a question. She's asking if we only talk about the wheel strategy. No, we can talk about all trading strategies in here. Sure, we're mostly going to be focused on the wheel. All right, Marilyn. Marilyn, you don't have an invite? How do you not have an invite, Marilyn? I thought we got you taken care of. Anyway, I'm going to give out this invite now to you, Marilyn. But you have only 30 minutes to use it. So don't worry. If you got to put in some trades, do your trades first. But that link will be good for 30 minutes for those of you watching live. If you're watching the replay, sorry, got to be here live to get in on that sweet, sweet invite. All right, so I'm going to go put this through. I'm just going to do this. We got the $75 put. That should be super safe. And then I'm going to do the 81. I really want to get the $2 on this. Should I do 83? No, we'll do 81. We'll be safe. Okay. Can't do the 82 because there's so low interest there versus the other one. I want to be able to get out of this if necessary. There you go, Marilyn. You're welcome. Thank you for being here. You've been here multiple times. Surprised you didn't already have an invite, but now we got you taken care of. All right. Feels empty in here today. Only 7 viewers. We're used to 20 or 30 people. I'm going to ask you guys, if you guys got value out of this today, please share this with your friends and family, your Facebooks, your social medias. Let people know that if they're interested in investing, that this is a good channel to watch. We're new. We're growing. We're giving away a ton of super valuable information. Honestly, people would charge a lot of money for webinars and seminars to give you less information than what we're giving you. I hope you guys know that and appreciate that. Do like, subscribe, tip, but also share it with your friends. Share it with your friends, please. We want to grow this. I want to get to 1,000 subscribers. That's our major goal this month. We want to get to 1,000 subscribers. We got big plans for stuff. No worries, Marilyn. We're all here to learn. And day trading is the tough one. I don't recommend it. But you know what? The great thing about day trading is it generates a lot of hype. And it makes for good TV. But I'm not sure it's really the greatest strategy on earth. You know, I've been taking some courses on portfolio management and working for a prop trading firm, doing hedge fund stuff, doing the real professional stuff. And even they are not a fan of day trading. They are not a fan of day trading. They are much more interested in doing stuff that's going to take 1 to 6 months to play out. They have a time horizon of anywhere from 1 to 6 months, not day trading. Cool. So this is what we got today. These are the trades that we're going to see. 1 minute till the market opens. I'm excited. I wanted to get some fill today. Let's see what happens. Well, guess what, Marilyn? Yes, we got a free of fill. Hillian filled. We'll get back to you in a second, Marilyn. We got 2 out of 4 filled. 2 out of 6. Oh no, our NATs dropped on ARCG. Our natural prices and ARCG dropped. We're gonna let it sit for 15 to 60 minutes and see if those get filled. But I want that money. Marilyn, and everyone else that's still listening, all 6 of you. Day trading is if you're breaking even, that's great, because 90% of people, it's been shown, these are facts, 90% of day traders lose 90% of their portfolio in the first 90 days. If you can break even after 90 days, you're in the top 10% of day traders in the world. That's how bad day trading is. You got to be really careful with that stuff. There's all these channels that make it look easy, but you know what? They're making money off of sponsors. All right, we only got 2 of them filled, but I'm hoping we get some fill here. But ARCG is sliding up, so it is less and less likely that we're going to get fill. All right, let's check out NBEV. I want to see what they're doing. They have 0 change. Nothing has changed on NBEV. And they had super wide spreads. I wonder if there's something wrong with that stock. AI is up $3. That's why our NAT, which wasn't, NAT stands for natural price, what the now new price is. We tried to get it for $2.30. It's only giving us $1.65. That's a $55 put. That's probably not worth touching at all. Let's do the math. 1.65 divided by 55. That's a 3% return versus a 4% return. That sounds small, but if you do your compounding, that 3 to 4% makes a big difference. That's also, not only does that change our compounding, but that changes our break even by another 60 cents. Okay? I haven't actually done one of these lives where we had orders waiting to go through. You guys are learning some more valuable stuff right now because you're tempted to get fill. You're tempted to lower your price and chase that fill to get it to go through it. You're like, oh, it's only 4%, 3%. What's the big difference? It's $200 versus $160. What's the big difference? Well, the biggest difference is how it affects your break even. It affects your break even. Because now, not only are you making less money if you were to chase that fill, but you would also change your break even. So if the stock drops, you could get taken out at a different price. So it actually makes a pretty big difference. Something that you definitely need to consider. The only reason we might change this AI order is because AI has gone up $3. So our $55 put, we could basically now move it up to a $58 put, and we still have the same type of ratio. So let's go ahead and take a look at the 58. Oh, there's no 58 on this stock. Spread is so wide. $5 wide on these stocks, on these options. It's so crazy. It's $5 wide. Not $2.50, $5 wide on these strikes. It's horrible. Because the open interest is so low on this AI. AI has got to be like, AI could be this company that's just going to be a massive breakout. It's going to be a massive success. It's going to catch up to Palantir, and it's going to like 4 or 5x from here. But I just don't know it. You know, I just don't know for sure that's what it's going to do. AI. I wish I knew how, and I wish somebody else did all the work for me. on analyzing AI and telling me if this is the next Palantir or if it's the next stuff. I need a programmer. See, that's the problem with doing all these tech plays and all these biotech plays. You need people with real engineering experience to really do the deep dives on this stuff. So this could be a really big company, this AI. And they've got so much cash on hand compared to their debt. They've got 9 times. I mean, look at the cash on hand. I don't know if we talked about that. Their total assets is $1.1 billion. They have $960 million of it in cash. They're not even one of these companies that's trying to like put all their money into their intangibles, right? They show nothing for intangibles. They're an AI company that shows nothing for their intangible value, which is like, that's what made me so interested and confused with this company. They have so much money, and they're not pumping their balance sheet, right? If these guys wanted to flex their balance sheet, they could probably drive up intangible assets as an AI company and say they've got 5 million or 50 million, and who's going to argue with them? Intangibles are something that's super weird to see on balance sheets and figure out, is it really real? You know, does this clothing company really have $200 million worth of brand power? And how fast does that brand power change? So when you guys are doing the analysis, make sure you look at the intangible assets and see if it makes sense. I like to see high intangible assets for tech companies, for companies that have a lot of patents, right? If they've got a lot of patents, it makes sense to have super high intangibles. When they're in fashion, yeah, they could have high intangible, high brand value, but how quickly can that stuff die too? You don't want to bet the farm on that type of stuff. But this company, this AI company, shows almost nothing, practically zero for intangible assets, has $960 million in cash out of total assets of $1.2 billion. These guys are going to be buying stuff. I mean, they got to buy competitors, right? They can buy just whatever they want. And yet the stock just keeps trending down. I wish we knew more about why. But we're not getting filled today. And unfortunately, I can't just increase my $55 put to a $58 put because there is no $58 put. Can't do anything with that. Let's go back to ARCG. ARCG is up $1. I could move our puts up $1. Let's go take a look at those. The 75, I can move it to the 76. We were trying to get $1 at 75. We could try and get $1 at 76. Why is it not letting me replace it? Anyway. Put it in as a similar. Move it to here. Put it to $1. Stock goes up $1. It's okay to move your strike up $1. Buddy says so. Buying power still 1/10 of the actual break even. That one is now working. So now we want to go out and close the $75 put. Cancel that one. Alright, we're going to come out and do the 81. We're doing the same thing. We're trying to get $1.90. We couldn't get $1.90. Going to 82 and trying to get $1.90 there. Although the 82 had a lot less open interest. I'm going to try and do the 83. I'm going to try and squeeze another 15 cents, $15 out of it. There we go. We got some fill on ARCG. Where did we get the fill? All right, we're going to cancel the 82 because I got the 83. All right, we got some ARCG. That's a good thing. I want more exposure to genomics, cannabis, EV. I got Tesla. What are the other sectors I want to be in? And Bitcoin. I've got plenty of Bitcoin. I've got space. All right, cool. I I guess ARCG is where it's at. This really helps my portfolio. I'm rounding out my portfolio with the sector that I really want to be in, which is the genomics sector. I want biotech, and this fits that biotech for genomics. All right. Now we're just going to wait for these other ones to fill. While we're waiting for these other ones to fill, hey, you guys, thank you guys for watching and listening. If you don't know what the wheel strategy is, go back and watch one of our replays. We talk all about it. We teach what is the safest and repeatable strategy to make money in stocks that I found safer than buy and hold. I show you with the numbers why it's so. I've grown an account from 25,000 to 43,000 using just this strategy, and I've done it very, very safely. Now, if you guys are still watching and listening, if you guys have any trade opportunities that you want me to look at, you want me to review, I am here for you guys now. We have 20 more minutes until we are finished. I'm always happy to look at your guys' trade ideas. Remember, I am not a financial advisor. I do not have a Series 7, and I do not have a license to sell insurance. So I cannot legally call myself a financial advisor, just like I cannot call myself a realtor unless I pay dues and take the test for becoming a realtor. Okay? Do your own due diligence, yada yada. What we're talking about mostly is strategies and analyzing trades, not whether or not you should do them, because only you can make that decision, because it depends on your risk tolerance, but also depends on your age and your account size. Okay? What we just did today, what I just did today on ARCG, could potentially, in a worst case scenario, eat up $8,000 worth of my account size per contract. Now I have a $45,000 account that's actually a very large amount of risk to take, but I just don't see that happening on an ETF. Maybe a few of the companies inside the ETF were to die, but it's very unlikely that the ETF is going to disappear. And I'm getting such a high margin that I'm not actually tying up that much buying power, and we really stumbled onto what I think could be a very interesting and very powerful technique for the wheel, as long as we can keep doing it correctly. I have to give some thought about how much of the portfolio to put towards this marginable ETF strategy, but it's very, very interesting what we stumbled on today. And again, if you guys have any stocks you want me to look at, if you have any stocks you want me to review, I'll go quickly through the fundamental analysis. I will tell you about what I see in their balance sheet, their cash flow, and their fundamentals. Because I'm always happy to help you guys. We need, let's go look at, well, no one's suggesting anything. I've got my trades for the day. By the way, I want to point out, we tried to put on a number of trades today. We tried to do 1, 2, 3, 4, 5 different companies, and that is more than normal. To do this strategy, you really only need, well, it depends on your account size, but I'm happy to do this strategy with 5 to 10 different positions. I don't need 20 different stocks, 100 different stocks. I don't need 20 different expiration dates. I'm happy to do 5 to 10 positions a month and still make very good returns with this strategy. It is a low risk, medium return, low time commitment, and low headache strategy. I really, really like this strategy. We did look at PACB the other day. Let's take a gander at them again real quick. Earnings come out on May 5th. That's why we avoided it. Do want to go take a look at that after May 5th. Excuse me. REGN. Take a look at that. Again, if you guys have any stocks you want me to look at, let me know in the comments and chat below. Regen, very expensive stock. We won't look into that. CWST, genomic stock, May 6th. This is the problem. So many earnings are coming out so soon. They're also a bit expensive for a stock. If you guys have any general questions about the wheel, about strategies, about day trading, about living in Bali, let's get some conversation going in the chat room. NVS has earnings on April 27th, but they are an affordable stock. They're not, I mean, they're pretty expensive, but we'll take a look at them. So I'm going to write this down. NVS PACB. We're going to put their earnings into our calendar to make sure that we get a reminder to look at them next month. Vertex Pharmaceutical Incorporated. If you're just tuning in, be sure to go and check out one of our replays, learn all about the wheel strategy, how to set them up, what numbers to look for. We are in the middle of live trading now, so if you have any trades that you want me to look at, any companies that you want me to review, I'm happy to do that for you guys now. Feel free to also let me know, again, in the chat room, in the YouTube chat room, while we're live, what is your hardest part about doing the wheel, if any? What is the part that you wish you had help with, or you wish was easier to do? Let me know in the chat room what you could get better at, or what you could have somebody else, what you wish somebody else would just do for you. If they could just magically do it for you, what would you want them to do? TAK, Takeda Pharmaceutical, earnings are May 12th, but very affordable stock at $17 a share. So we will put that into our calendar to look at later after earnings come through. CDNA, Caradex Incorporated. Tastyworks is running a little slow today, I noticed. CDNA, earnings are April 29th, $76 stock. Fate Therapeutics, up next. We've got 14 minutes to go here on the Fox with Stocks live trading YouTube stream. May 10th for Fate, $80 stock. That would take up a lot of our buying power, unless we have high margin on it. TXG, earnings are May 5th. Tastyworks is running very slow today. Still waiting for that bid-ask as a $200 stock. So we will not consider it for the wheel. At least not on my account size. ACCD, $47 stock. And I do not see earnings on Tastyworks. So let's go and see what type of return we could get at the money, $47. So let's look at the 45. We get $1.70 at the 45. We're going to get about almost a 4% return at the money, which means we're definitely not going to get a 5% return outside of the money. If we went down to the $40 strike, we'd only be getting 1.6% return. But there is actually a very large spread between the bid and the ask. Open interest is very small at 11 units. Let's pretend we got $1 at the 40. We'd still only be getting a 2.5% return at the $40 strike, which would give us the break even that we want, but a super, super low return. So ACCD, unfortunately, does not have the setup that we would like for our wheel strategy, or at least not for myself. INCY is next while we wait for Tastyworks to load the information. It is an $81 stock. Earnings are May 4th. We have a bit more open interest than the last one. Possibly get a 3.5% return at the money, so we're not going to get a 4%, 5% return out of the money. So then we can move on to our next one. See, if you guys are interested in learning to do the wheel, this is how quickly you can rule them out. By the way, when you guys are doing your research, when you guys are going through this, your mindset for that initial analysis is you are looking for reasons not to make a trade. You are looking for reasons to stop wasting your time on that stock and not make this trade so that you can move on, because there are, as you guys probably know, over 9,000 stocks you could be trading. So as soon as you find that red flag or something that doesn't fit the model, you can move on to the next one. This stock, IOVA, Iovance Biotherapeutics, has super wide bid-ask spreads that make it almost impossible to figure out what you could possibly get filled at any given price. We could get 4% if we got lucky on the fill at the $25 strike. It would give us a break even of 24 on a 31, let's call it, which would give us a very nice break-even percentage of 22%. Might as well look at this one. You look at IOVA. Probably going to be the last stock we look at tonight, maybe. It's already 9:50. We already have our genomics exposure with ARCG, but if we can find a unique company inside of there to trade, that is also good. Only problem with this ARCG strategy is it could potentially use up a lot of capital. Potentially. Alright, why are you not loading IOVA? I'm guessing that my internet is going slow tonight. These websites are now taking longer and longer to load. Alright. Iovance Biotherapeutics Incorporated. Earnings come out May 5th. I didn't notice that on Tastyworks. I did notice it, but for some reason I kept going forward. They have a massive down pull. They were at a high of 50. Now they've dropped almost $20. Levels they have not really traded at since April 2020 and before January 2020. All right, institutional ownership is way high. Wow, 99.2% of this company is institutionally owned. Insider is 0.77. If you're doing the math, that is 99.99 not retail traders. This is institutionally owned and operated. That is very, very high. I wanted to see insider trading, but I'm not seeing it. Where are they based out of? Okay. Assets to liabilities, we're looking at about 1/7. 111 divided by 768. They only have 14% levered on their debt. They are losing $68 million a quarter. Whoa, they have no cash on hand. They have 72 and they're losing 68. So what's going on? They're going to need a cash infusion from somewhere very, very soon. Not something that I want to be a part of while doing the wheel. So I have now lost all interest in IOVA. All right, we have time for maybe a couple more. That was the last on our ETF list. It is 9:53. We got 7 more minutes till I'm signing off. If you have any shares you want me to review in the next 7 minutes, now is the time to do it. Let me take a look at my Discord chat room to see what we've got going on. Did not see any invite for the live chat in the announcement section. Chitango says he's really happy to be getting out of his old stock. strategy and doing these other strategy and doing this long, short, and the wheel strategy. Santa asks in the Discord chat room today, any opportunities? Why weren't you watching the live stream, Mr. San? We found some very cool opportunities today, and we've got some fill. Today may be a slow YouTube day, but today has been a very good trading day. We have opened up 2 new positions. 3, I take that back. We now had another one get filled. We have 3 positions filled. We have Afria filled at 75 cents. Could make us $75 in the next 30 days. Hillian got filled at 39 cents. Going to make us $39 in 30 days if we're lucky. And ARCG, maybe our best and most unique find today, going to make $214 in 37 days or own some shares. So I'm actually very happy. This is a productive day. Any day that you can open a position or do some really good research is a productive day. Doesn't matter how many people don't show up for your YouTube channel. Okay? And again, it's not about quantity. It's not about opening 30, 40, 50, 60, 100 positions a month. I've done that using the wheel strategy. I wanted to test the shotgun strategy where I just basically took everything that met my criteria that didn't have a huge red flag, that wasn't in oil or bad accounting countries, and I opened those positions. And that was the only time where I had multiple stocks get put to me and blow through my break-even prices to the point where selling covered calls wasn't even worth it anymore. Okay? So I do not recommend that, and I do not use that strategy of just going willy-nilly with the wheel strategy, doing any stock that works. I do always recommend checking out the fundamental analysis and being picky. We're here to pick stocks. This is a stock picking strategy, this wheel strategy. We want to choose every month the best 5 to 10 positions that we can. The best 5 to 10 stocks that we are interested in. Since we've got a few more minutes, let's look at one that we looked at before, Vuzi, from the Vuzic Corporation. Unfortunately, they do have earnings on May 10th, but we decided to do this last time. And you could currently, if you haven't already, open a position, $22 strike, for $1.55, netting you 7% return or a break-even price of $20.45 for a company that is making HoloLenses, that is AR glasses, for military and industrial and enterprise use. So for doctors, for industrial sites, and for military use, because Microsoft is going into this space. They're a competitor. Somebody told me that Vuzix Corporation was partnering with Microsoft and that Microsoft had gotten a large multi-billion-dollar contract from the military for AR glasses. However, I could not verify that. Thank you, Marilyn. Lovely to have you on, and I will see you on Friday. We'll be doing another live broad stream on Friday. But I could not find anything that verified that Vuzi and Microsoft were in partnership or even partnership talks. As far as I'm concerned, they are competing with each other. And until I see anything differently, I think they misread the news. But there's a nice fat 7% return, and this is a company that maybe gets bought out by a major competitor in the sector. Excuse me. All right. We only have a few more minutes to go. I want to remind you to check out our referral links in the description below. And if you made a trade today and you think you're going to make some money, feel free to give a tip. If you can't afford to do it this month, I understand. Please stay with us, watch live, follow along with our trades, and if you make some money, be sure and give back. We have multiple ways to tip. You can use your PayPal, your credit card, your Bitcoin, your Ethereum, and even your Bitcoin Cash. And if you need any other way, you message me and let me know. We've already given out our Discord invites for today. If you did not get one, let me know. I will be signing off in 1 minute. And I want to thank you for watching Fox with Stocks. And the most important thing that you can do for us now is share this channel with your friends and family. We try and do a fantastic job for you guys. I'm here to help you get rich. I'm here to help you make money. I'm here to help you retire early. And I do mean all those things because I believe that the vast majority of people are good people and that their talents are being wasted working full-time jobs for companies that they don't like. And I want to help you make the money that you deserve so that you can do better things with your life and improve the planet, improve the world. So if you've enjoyed this, please, of course, as they say, like and subscribe. But more importantly than liking and subscribing is sharing it with your friends, sharing it on Facebook, Twitter, and the rest. And if you have any questions, join us again Friday morning at 8:30 a.m. We will be going over the wheel strategy, but I'm going to be putting in more and more tips and tricks for the wheel strategy so that it's good for newbies and it's good for the experience. Thank you for watching and have a great morning. We've got some fill today. It should be a good day for trading.